Now, the big news out, the MPC left the interest rate unchanged at 18%. Was that in line with your expectation?
A very good afternoon to you. Yes, indeed, that was pretty much in line with general market expectations and my expectations too, as we had spoken over last week. Though the inflation is increasing at a decreasing rate, that is, we are in an environment of disinflation. We're still not yet at a point whereby the medicine can be taken off. That is, the interest rate can start being cut. So the MPC, in my opinion, did a very good decision, reached a good decision to hold that rate steady at 18%. And just looking further afield across the borders, our brothers in Uganda reached similar decisions, and they unfortunately have been actually taken to task by many analysts in terms of their quick decision to reduce interest rates. That was in the previous months, in February and in March. So this month, having held the rates there steady, in Kenya too, we took a cue from them, and we hope that the economy as a whole will be in a better position moving forward.
When can we perhaps see the MPC decreasing rates? We have some analysts saying perhaps in the third quarter of this year.
Well, at this point, to be honest, it is rather difficult to tell. And the guidance we got from the central bank today was that the non-food and non-oil inflation rate at 11.2% is really the key one that is being targeted at this point. The central bank has a 9% target. With that at 11.2%, it may take some time for this kind of inflationary level and interest rate level to be able to bring that in line with expectations. So at this point, it would be safe to say perhaps another month or so at the very least of keeping that rate steady.
Now, with the decision already priced in by some investors, looking at tomorrow's trading session, what's the likely impact there?
Well, looking over at the equities side, this decision had been greatly expected by the market, so we don't expect. I don't expect to see increased equity market activity or increased a different stance in terms of the risk perspectives facing the market. And I really don't expect too much on the equity positions. However, on the bond side, we hope that I hope rather that this will calm the fears that a lot of bond investors had at the beginning of the week. The bond market up to yesterday had really been trading very few volumes, in line in part because also of a central bank change in the system, but all in all, the overhang effect really had been the MPC decision, which as it has come in today is a hold. So we expect to see perhaps increased trading on the bond side.
Now, moving back to the equity market, we had a Standard Group out with results posting a 90% drop in profit, but operating profit was down 1.9 billion shillings from 2.13 billion shillings. What were your thoughts on those results?
Well, generally, those results were in line with expectations, my expectations. But the big dilemma, rather the big surprise was relating with the broadcast. That is the television division of the Standard Media Group, where they factored in a loss of 109 million shillings, in part due to relocation costs, and also a substantial mix in terms of the programs they offer, and those have brought in quite a large aspect of costs and really brought down the profitability of the group as a whole. But looking over the print division and the advertising and also the distribution of those products, we saw double-digit growth in terms of the revenues, 16% in print, 15% in the distribution aspect. So that section of the business has been doing pretty well. Now, bring it all down to the shareholder level, though the shareholders will not really be pleased in terms of, one, the board has decided not to give out a dividend, but to calm those fears, they have offered and proposed a 1 for every 10 bonus issue for the investors. So all in all, the Standard Media Group, though in a dicey situation, increased capex, increasing revenues, it still is a stock to look out for, especially as we go forward in an election period where we expect to see increased revenues from the group.
Another stock that has been on the spotlight has been Total Kenya, been on that downward spiral given those disappointing results last week, but really up in the session. What was driving that move?
Total Kenya has been in the news. Yesterday we saw that the parent company take out a media statement saying that they have taken the management to task over the results posted, and that some restructuring is expected. Now, with this restructuring coming online, investors are pretty happy about that, and we hope that Total will be back in the profitability section, back to the black. But keeping in mind what has happened in the general energy industry in Kenya over the past fortnight or so, we've seen Kenyan Market fluttering, its stocks fluttering with all-time highs, and also coming against on the back of the Chulo oil find in northern Kenya. So we have pretty much a mixture of the two. One company not performing too well, another performing very, very well, and positioning itself as a good pick for any buyout mega corporation out there in terms of perhaps CNOOC to take over Total Kenya.
All right, thank you so much for joining us, Kimathi Ikiao. He's an independent analyst joining us from our studios in Nairobi.